This is a weekly chart of the euro going back to 2010, so that just gives us a bigger picture outlook. You can see that sort of if I move it back to 2012, we are in fact in something of a downtrend. We've had a little bit of bounce end of last year into the beginning of this year, and then pretty much gone sideways. But that bigger picture does tell us that we're basically in a downtrend. And this weekly chart, you can see we had a nice challenge of the 200-week moving average there, which is usually quite a big level and something we're keeping an eye on. We had that was last month, was it? I think August, yeah, middle of August, we kind of hit that 200-week moving average. We tried to pierce it, but we didn't manage to close above it, and then the following week we plunged. So that's certainly done its job, that 200-week moving average. And we're back below this trend line here, which is quite a long-term trend line going back to the middle of 2011, so over 2 years, this trend line. Anyway, so you can see that pressure looks like pretty much starting to push this market lower. The weekly stochastics got very overbought and they've just turned negative as well. Just keeping on 100-week moving average at 130.42. On the weekly picture, that looks quite an interesting level. And we've also got a weekly fib level of 130.73. So the 130.75, 130.45 area on the weekly chart looks like a reasonable target for this sell-off. We'll go slightly shorter term now. Have a look at the daily chart, which is a bit more sort of sideways action, really. I think the last webinar I did was a week or two ago, and we were just coming up around here. And I was saying that we'd reached the top of the recent range, and we've got very overbought. So I was slightly concerned about a sell-off. Well, in the end, we got it. It took a few days for it to turn eventually, but once we broke that 132.90 area, the losses accelerated, and that was pretty much the time we'd broken the downtrend. I can probably throw a trend line in there somewhere just to clarify that. Probably the clearest one. So yeah, once we broke that trend line there, we collapsed. Anyway, what happens next? So daily chart, just starting to enter oversold territory, but I still think we've got some downside room. I think in my report today I've written a break below 131.55 should trigger some further stops. That hasn't actually happened yet. 131.58 is below. So we'll put 131.85.75 is your support level, and we're kind of hovering around there at the moment. So just for the short term, just for today, we may have actually bottomed out. I'll have a look at the shorter term chart and see if we're getting oversold. But I am concerned we probably do still need to test this. The 100 and 200 day moving averages are so close, 131 sort of 45.35 area. I wouldn't be at all surprised to see that before the end of the week. We'll have to see, but where are we now? There's the shorter term chart, 4-hour chart, which I like to keep an eye on. These candles are sort of giving us an idea that maybe we can see a bounce. Actually, look at these. We spiked lower and we're looking a bit more positive. That last candle's what I think they call a hammer, or I call it a reversal. Well, that'll be a reversal candle anyway, because we've spiked lower and we've managed to close higher on that candle, and we're kind of looking the same on this candle. So, as I say, perhaps that 131.55 area is going to hold downside just for today. We'll have to see. But I'm certainly not getting very bullish. I think any rally at this stage is still a sell. I don't think this sell-off is over. The best we can hope for is probably some sideways action. I've got some immediate resistance at 132.00, so we'll see what happens there. I seem to have lost my statistics here. Let me try and get that back. Don't know how to do that. Click around. Insert study. Try and get this back. There we go. Now I've got two. Just bear with me while I try and figure out what I've done here. Well done, but anyway, let's just scratch that down. Get rid of that. Okay, so that's the euro for you. Yeah, I think there's still a bit more room to the downside. 131.85 is going to determine it in the short term. I think we're going to struggle there, and although the 4-hour chart is getting oversold, I don't know. Just watch these two candles. Maybe today, as I said, we might have seen the low, but I wouldn't be surprised to see us lower towards the end of the week. Test that 131.45.35 area, and then below that. 131.00 is a 50% retracement of that whole move up, so that could well hold for the time being. But all in all, the weekly picture, if we're looking slightly longer term, is quite negative. Actually, that 100-week moving average coincides. No, sorry, it doesn't. That's another 100 pips lower. 130.45. Yeah, longer term, I do think there is a good chance we get to sort of 130.75.45 area in this euro. Maybe next week. It does look like we need to sell off a little bit further. But anyway, that's the euro for you on a fairly short-term basis. If that helps, let me get some other currencies up there. So this one's cable. Okay, so look at cable. Pound versus the dollar. Weekly chart. Scrunched up a little bit. Not really going anywhere, as you can see. There is a bit of a slight down channel on a very long-term basis. We're drawing up some trend lines here just to give us an idea. Okay, so that makes it slightly clearer. But we have got some sort of down channel, but it's not very steep. And anyway, we managed to put in a bit of a double bottom here. That low was 148.32. The next low was 148.14. So that was just around March, and then a second low coming in around July. And that double bottom did actually propel us higher quite nicely. In fact, we managed to test the previous high from 17th of the week of the 17th of June at 157.51. We got to 157.17, so not too far away. As we start to get a little bit overbought on the weekly stochastics. But I think the important thing to notice here is that we just hit quite a lot of moving average, weekly moving averages. The 100 weekly moving average was at 156.85, and we just blipped through that, but didn't manage to test the 200 weekly moving average, which was at 157.40, and then we backed off pretty quickly on that week there. Which was around the end of August. And since then, we've re-eased a little bit. We haven't sold off quite like the euro has done, but we're sort of in the middle of that channel anyway that you can see going, which started up here at, what was that now? 167.39. Anyway, we're sort of in the middle of that area. So are the moving averages. You can see pretty much why we ran into some resistance there, and that did work in the end, at least on the weekly chart. On the daily chart, well, you can just see we reached that upper limit and we sold off. We did get very overbought on the daily chart, so when you bear that in mind, along with the fact that we were hitting some weekly levels, I suppose it wasn't a huge surprise that we at least saw some profit taking, even if we didn't see the sell-off that we saw in the euro versus the dollar. We'll throw a trend line in here. That's quite interesting. Table isn't one that I follow normally, so I'm just trying to catch up. And you can see that we've just held above the trend line, so that certainly has worked that uptrend from around the middle of July. What's that? Only about 6-week trend line uptrend. So it's a relatively short-term trend. But the other thing that was worth noting is the 200-day moving average. We didn't really close above it. We gave it a real good test on a couple of days, but we didn't really manage to close above it. We got around there here on this close 155.00. Anyway, we've now managed to propel ourselves off that 200-week moving average and away from the uptrend support line. So it looks quite positive in the short term, looking at this daily chart, in fact. Maybe a retest of these sort of highs up around the 157.00. 157.50 area wouldn't be a huge surprise looking at this. If the graphics have certainly turned, We didn't get that oversold, but we are in an uptrend, so that might have just been enough to unwind the oversold, the overbought situation. We didn't quite get oversold, but that was enough. We're in an uptrend, so you don't necessarily need it to go heavily oversold before you can see some buyers coming in. And certainly, once we satisfied ourselves that we were going to hold above that 200-day moving average, we pushed higher. So yeah, this actually looks quite positive in the short term. That's what's the 4-hour chart saying? If I can get that 4-hour chart to show. There we go. Okay, nothing spectacular here. Let's put some Fibonacci's on to try and get an idea of what some targets might be if we do continue higher, as I think we might well do. Okay, so these Fibonacci's work quite well. Look, we managed to rally all the way back up to 61.8. That's always going to be strong resistance, even in quite a positive market. So 61.8 worked not very nicely. That came in around the 156.00 area. The high was 156.04. The exact Fibonacci level is 156.06. So that worked perfectly. And then we sold back down to this level around the 155.35 area. So again, that's worked pretty well. So the range will probably be around the 155.35 up to 156.00 area. I think that's going to be the levels to watch. Probably trade around there for a little while. But as I said, there is a chance we can break higher. So just watch it if we start getting through 156.10, and then we could push on to 156.38, maybe 156.55. But although the 4-hour stochastics look a little bit negative, I wouldn't be too worried about that. Just remind myself of the daily picture. Yeah, that's actually looking quite positive. So I think we'll stick with the uptrend that we're seeing at the moment. We'll stick with the fact that we bounced off the 200-day moving average and assume that this short-term sell-off was a buying opportunity. But as I say, this 61.8 has held nicely, which you would expect it to on the bounce. But don't be surprised if we break above there eventually and push higher to 156.5 eventually. And of course, we've got that 157.00, 157.20 high from July, wasn't it? I think. No, August, and then the previous high, which might well have been July. Yeah, it will. No, it was June. Well, 157.50. But that's a long way off before we can start talking about that. The risk is where will we turn negative? Well, look, that first Fibonacci support ties in really nicely with the 200-day moving average. That's around 155.00. So that's your major support on the downside. Below there, we've got to start questioning whether this market's going to weaken now. We've got some lows here at 154.63, and that's going to tie in with the uptrend. So below 155.00, probably don't really want to be long anymore. Below 154.60, we probably want to start thinking about maybe even getting short, because we could be headed a lot lower. Well, when I say a lot lower, maybe up to 100 pips lower, around the 153.17 area. Maybe 153.60 area, which is the 100-day moving average. So, yeah, I guess I would say from that, looking positive at the moment. Any longs, you don't really want to be long below 155.00, as I say. But if we do continue higher, look for 156.00 again. And if we manage to break through there, then it's certainly going to look a lot more positive when we're looking for 156.55. Okay, that's my thoughts on cable. Keep going on the currencies. Right, what are we looking at? Dollar yen, here we go. Dollar yen weekly chart. Clearly, looks like we might be getting a breakout here. Last time we looked at this, we were sticking in this triangle, and what I said was just trade the triangle until we get a breakout. And I said this triangle is usually a continuation pattern. We'll probably get a breakout to the upside. Well, bang on cue, that does seem to be happening. So you can see already this week we're making that break above there. So I think that's about all we need to say for the weekly chart. I'll put some trend lines in here just to make that more clear. Okay, so very clear trend line, and that was broken yesterday, and coincidentally, oh yes, I remember now, Sorry, I haven't looked at this chart since the last webinar, but the 100-day moving average was around there as well, 98, 96, 99 00 area. We've convincingly broken that yesterday and closed above it. So it's bulls in control again. Stochastics looking positive. Yeah, we look pretty good on this now. Not one to be short, I don't think. We'll have a look at some targets, but I think that's pretty self-explanatory. We've broken the triangle. We've broken the 100-day moving average. We've closed above it. A very positive-looking candle there as well. We opened. We've rallied right from the open and closed very near the high of the day. So what can I say? That's very positive for the dollar yen. 4-hour chart just to try and get an idea of what's going on. Okay, we've got a little bit overbought. That's really the only negative I can see at the moment, that we're overbought short term. What does that mean? Well, maybe we'll trickle off a little bit or go sideways for a while, but I certainly wouldn't be sure of this. Not unless we see it close back below that trend line. That would be the only way that I'd start to worry and see that as a false break. But so far it's doing what it's supposed to do, break higher eventually and push on. Okay, so it's very, very short-term levels to look for. Oops, if you haven't managed to jump into that market and you want to, we'll use Fibonacci to see that. Well, 99.00 area, 99.10 probably, 99.10.00 area looks like good support. I wouldn't rule out a drift lower to there. What does that look like on our trend line? Yeah, that works quite nicely with the 100-day moving average and the trend line at around 98.90. Okay, so yeah, 99.10, 99.00 does look like quite good support for that reason. If we start to break lower, well, we wouldn't rule out a test of 98.60. I don't really see that happening, to be honest. Anyway, you can't rule it out on an intraday basis. It could just spike down there and then have a nice bounce higher. But those are the levels you're looking for on the downside: 98.10, 99.00, and below that 98 sort of 70, 98.60. If we're lucky enough to see it down there. If someone to be there, okay. So yeah, Gabriel wants to buy the researchable trend line, and I would agree with you there. I think that's risk reward wise, it's worth it, because I mean, really, I would suggest a possible trade would be to buy it down to 99.10.00, and then worst case scenario is dropping out below 98.60. If you're happy with a 40-50 pip risk in order to make something significantly more, then I'd say that's probably a worthwhile trade. If you want to save some bullets and average down to 98.60, if we're lucky to see it far enough, then you're going to reduce your risk even more. So some targets for the upside, if I'm right and we do keep going higher. Let's have a look. Probably easier to do that on the daily chart at this stage. Expand that a little bit. Right, let's try and get a perspective on this. Okay, so we're about to hit Fibonacci level at 99.94, 99.93, 94. So we've got a good, where are we now? We've got a good 50 pips really, or so, 40 pips or so. We can move further on the upside really before we need to be concerned about taking any short-term profits. Yeah, that does look like a bit of a level actually, doesn't it? That 99.95. We've got a daily high there, up there, and we've got Fibonacci resistance. So if you're short term, if you're long for the very short term, 99.90 to 100, I should say, is probably a good target for those longs, and maybe take some profit there and see what happens. We could start to ease back from there and maybe test a trend line, which is going to be more around the 98.80, 98.70 area down here. If you can see my cursor, that could play out. Hit 99.90, 100, drift back for some profit taking as we get a bit overstretched on the top side down to the 98.80, 98.70 area, and then we could buy in again. That's really nice support because it's trend line of Fibonacci, and it's actually not that far off the 100-day moving average either. So I quite like that idea. Whether that scenario happens, I don't know, but if it does, it would be a nice little setup there perhaps. And then of course, if we start clearing 100, which is a psychological level as well as basically this longer term Fed level, then we're off again. We're positive again and looking for 145. Certainly, that would be our first target. I would suggest 145, and then we're looking around these highs, 100 and 170, 180. But anyway, look at that next time in a couple of weeks. I'm guessing, I think that's probably all we can say on that. Our only risk then, of course, is move below 98.60, and then we're probably looking at 98.25, 97.90. This will be important if we do continue lower, 97.90. If we get a bounce off there, but that's quite a long way away. If we start heading down that way, we're not looking very positive anyway, but just have to review that on the next webinar. Okay, I think that's all I can say for the yen, unless anyone's got any more questions on that one. Aussie's always a popular one. Let's have a look at that. Okay, I haven't had a look at this for a while. Scrunch up the weekly chart. Oh yeah, of course we've had all that. We've had that sell-off. Actually, I think the last time we had a webinar, I thought there was a chance of a little bounce, and we didn't really get it. Okay, so the obvious. Oh yes, I remember. Yes, I remember. We hadn't really hit any downside targets, so I couldn't pinpoint why we'd had such a good bounce. But when I saw this candle here, this big green candle with a new low and a very good close higher, I thought there was a chance we could see some sort of recovery, or at least we'd ended the downtrend and we would go sideways. We got very oversold. I'll have a look at the daily chart just quickly to remind myself. Yeah, we got very oversold, and we managed a really good bounce. And you can see the daily was very oversold. That was the only reason I could see for a bounce. I couldn't see that we'd hit any major support level. Anyway, that did sort of indicate with that massive reversal, the new low and the close near at the top of that candle, and actually not that far off the top of the previous candle, which was the week of the 29th of July. So yeah, that said to me in the short term that we've bottomed out and possibly go a little higher, but certainly we could see some sideways action anyway. That seems to have happened. We've continued sideways. We've managed to hold above the previous lows of 88.70, 88.50. Where did we get to last week? We got to 88.92. Okay, so basically, yeah, we're going sideways while we unwind some oversold stochastics and we see where it breaks next. But I think this is a continuation pattern. I think this is just a pause in a very steep downtrend. You know, after falling, wow, that was a big drop over a couple of months. If you trade currencies at all, I'm sure you've been aware of that move. But as I say, I couldn't really see any reason why the Aussie came to a halt here. I couldn't find it anyway. Maybe someone else found a reason, but I couldn't see that. So going forward, we've unwound some severe oversold situation. We've gone sideways. I think you've got to watch for the break below 88.50 now at some stage. I'm not saying it's going to happen now. We can go sideways for quite a long time. But trade the range, I would suggest, between sort of the 92.50, 88.50 area where we have been holding, and just wait for the breakout, which I think, if it does come, or when it does come, will be to the downside. I'm not seeing this as a bottoming formation at the moment. There's no pattern that's telling me that this is going to bottom, and there's no massive support here that would make me feel that I wanted to get long. Anyway, if we do start to break 88.50, we're probably headed for 85.50 on a weekly basis. It'll take a couple of weeks, I imagine, to get there. Just reading a comment here. I wanted to short it on this 90.50 level, but price staying there with, yeah, okay. So yeah, it is hovering. Okay, so I think that's enough for the weekly chart. Let's have the daily chart. Okay, so we got oversold again. We've been bouncing around. We got oversold again in the last couple of days, as you can see down here in the right-hand corner. I just wouldn't say that's any sort of pattern that I'm seeing here. It's just a holding pattern, really. Very, very short term. We can throw some trend lines on here. Okay, so you know, trade that channel really. We look quite positive in the very short term, so yeah, we can certainly be headed up towards 92.00, 92.50 even. It was 90. Yeah, 92.50. Okay, so yeah. Yeah, we're trading at 90.34 at the moment. Wouldn't really be surprised to see us test the upper end of this channel at least, which is sort of 91.80. It looks like on the daily chart. Yeah, so 91.80 looks like a reasonable target over the next few days. Maybe we'll run out of steam there. We'll start to look a little bit overbooked. I would only then start getting positive again, short-term positive at least, if we started to get through the 92, 35, 55 area. That's the high of this candle here and this candle over here. And as you know, that 92.50 area is quite strong Fibonacci resistance, and it has been holding. So we're really going to have to see a close above 92, 92.80, 92.90 to start getting positive, or less negative at least in the short term. What can I add to that? Nothing really. Okay, so yeah, short term we can move higher, but we're going to have to really watch it around the 92.00, 92.50 area, and only a good close above there. We could then look positive sort of 95.00 area, but we'll come to that on the next webinar and see how that's looking. I would suggest probably we move up to the 92.00 area, 92.00 area, sale, come back down, and then I'd be worried about the break lower. I think the break lower is the real risk. 4-hour chart, yeah, it's getting a bit overdone on the 4-hour chart. Still possibly got a little bit more room, as I said, but just have some very, very short-term Fibonacci levels. In case there's any clues there. Actually, we have got a little bit of a double bottom there. Very small double bottom. Yeah, 90.61. So we've got 91.01 as a potential target. What did I say on the daily chart? 91. I said 91.80. Okay, so we've got a good target of 91.01. I reckon we'll see that. We can still see that. We are overbought short term, but I'm not too concerned about that. There is a little bit more upside potential over the next couple of days at least. Okay, probably said enough there, waffling on a bit. US dollar Swiss, certainly we can have a look at the US dollar Swiss. Always worth a look. Okay, weekly chart, not doing much. Not doing much at all. Let's have a look, see if we can get an idea of what's going to happen here. Okay, I'll open that up to try and... Alright, so we're in a narrowing range here again on the weekly chart. I think this is the relevant bit. Throw some trend lines on. You can see it's just a sideways pattern. There's no other way of describing that. We're in around, not quite in the middle of the range. What can I make of this? Okay, so we've had a bounce off the lower trend line. We didn't quite make it to the upper trend line here, which was at 110.14. We only got to 109.30, so quite a way off that, and we're backing away again. We've done that for the second time. The previous high here, which was in the week of the 10th of June, that was 109.44. So we only got to 109.31 this time. That was 2 weeks ago. Okay, so very much a range trading market. 100-week moving average at 107.12. We're hovering around there at the moment. Doesn't look particularly positive. We've got a bit overdone on the stochastics. Near the upper end of the range, we're now returning to the middle of the range. On the weekly chart, the big level to look for is 105.30. That's a 200-week moving average if we continue lower. But other than that, you can see it for yourself, stuck in the range. Daily chart. Yeah, okay, all that stuff we've got from the upper end of the range and now we're breaking lower. Put some Fibonacci levels on here just for some sort of clue. Okay, so we've hit our first, our first downside target for the sell-off was 107.75. Once we broke through there, we headed pretty quickly to the next Fibonacci support level of 106.75. Just bear in mind here that we have got 200-day moving average at 107.00, and we've broken below that today, and that is now acting as resistance. We closed around there yesterday. The low, yeah, that was pretty much the low. Today it's pretty much the high, so this is not looking very positive in the very short term at least. But we do have good support around 106.75, 106.70, and that has held. So what does it mean? We'll have a look at the short-term chart in a minute. I'm guessing that means we might see a little bounce. It will. I would feel more positive if we managed to get above 107 down low and a closing one there tonight. We've managed to unwind the overbought scenario on the daily stochastics, and we are actually getting quite oversold at the moment. So yeah, there is a good chance of us holding that 106.75, 106.70 area. The level to watch below that is 100-day moving average at 106.38. Below there, not going to feel so comfortable being long at all. And we're probably looking at 105.96. Futures, no, I'm looking at the spot price here. I tend to look at spot prices because they tend to be more liquid and have more data on them. You get quite gappy markets on the futures, so I'm just looking at the spot price here. Okay, so we go to the shorter term. Yeah, we've got quite oversold. We've got quite oversold actually continued lower. But we've got some divergence here. Yeah, this actually looks quite positive. Look at this 4-hour chart. This does look quite positive in fact. So this does back up the thought that we've bottomed out at this stage at least. Yeah, I quite like the look of this. Short-term stochastics turn positive. We've found good support around the 106.70 area. We've got a bullish candle on the previous 4-hour. We've spiked lower, but managed a nice close towards the upper end of the candle and certainly way further than halfway through that big red candle. So yeah, this looks quite positive. If you're long, I would hold it. You've got a nice tight stop below 106.60 anyway, which is the low for this move. If you're trading very, very short term. 107.18 is the obvious first target. You can see there was some activity around there anyway, so probably a good level to take short-term profit there. If we start getting through 107.25-ish, then yeah, maybe we can push on again. I mean, I've got a feeling we're going to start looking a bit overbound around the 107.20 level in the very short term. Possibly, it depends how quickly we get there, I suppose. But anyway, don't rule out a continued move higher to 107.5. 107.50, 55 area certainly looks possible, and that's actually quite good resistance. I wouldn't be running longs perhaps any further than that at this stage. But if you get that far, I'd certainly be taking some profit on the rest of them. I mean, that's a really good profit. 60 tips or so over the next couple of days. Just let me remind myself of some levels on the daily chart. 107.70 area. Yeah, so really 107.50, we want to be taking some profits on any longs if we manage to run them that far. And then you're really going to run into trouble around the 107.70, 80 area. So if you're flat there, maybe that's a good place to start trying some shorts and see if we have another dip. Can I say any more on that? Don't really think so. Yeah, your range on the bigger picture is 106.70, 107.70 really. Who knows? It might range around there for a little while we decide where we go. But short term, I fancy it a little bit higher. So if we've managed to get long, that might turn out to be quite a good trade. And above 107, below that 100-day moving average certainly would be more comfortable. 107 below 107.20 is our first resistance. Okay, I've probably said enough on that. Can't really think of anything more to elaborate on that one. Hope that helps. New Zealand dollar's always a bit of a worth a look at. Weekly chart. Okay, weekly chart, yeah, not really gone anywhere, has it? We're near the sort of lower end of the range. I think we've put some trend lines on this weekly chart just to get an idea of what's going on. Yeah, we're really hovering around this, sort of returning to this sort of lower area that we've been through through June, July, August. We've been really bouncing around there. So again, trend line is around 76.65. We've just hovered above there. And we've got 200-week moving average at 78.00 area. This isn't really doing anything. We're stuck in a range. It's pointless trying to make too much sense out of that. But the important thing to note is, for this New Zealand dollar, this trend line. So the 76.60 sort of 50 area is going to be important. Let's have a look. It doesn't look particularly positive, I have to say. I would be worried about a break there. Maybe you wouldn't be shorting it now, but I'd certainly be ready for a break. And if we do break 73.35, looks like a nice target. 73.50, maybe 73.70, 73.35. That would be a longer term target. Yeah, not looking too positive. That looks like a anyway. It all depends on whether it breaks down. What's it doing short term? Got a bit oversold. So we have bounced from that oversold level. So maybe we're just going to get stuck in this range. I mean, really, the recent range is quite clear. It's that. Trade the range until it breaks is what I normally say. And we've reached the lower end of the range. We got very oversold on the daily chart and we're turning higher. So what can you say? Let's throw some short-term figures on. Actually, I'll do that on the short-term chart. But okay, so trade the range. We're at the lower end of the range. We could push higher and head towards the upper end of the range. Just bear in mind 80.33 or 80.30. That's the 100-day moving average. That's going to be something that's fairly relevant. And short-term, just to give us some ideas. Okay, well, we've managed to top out at 78.40, 78.40, 78.40. Yeah, all these times. So 78.40 is the level to watch. 78.20, 78.40. That's the resistance. We've got overdone now on the short term. So, blimey. Okay, we're selling off again. This is a real mixed bag. Daily charts positive, short-term charts negative, weekly charts negative. Okay. So we felt at 78.20. We're coming back down. Maybe we can revisit actually this area, 77. So, well, the low 77 area does look like that's possible, doesn't it? And then it just all depends on this trend line, which is 7700 area. We break that, then we hit the slightly bigger trend line area, 78.38. So yeah, trade the range until it breaks. I think that's what's going to have to happen. But it does look like we could actually already come back down to that lower level. Okay, a bit of a mixed bag there. Nothing specific. I can't put a finger on there. We'll just have to see how that one develops. If there's any requests for any markets, let me know, and I'll have a stab at them. In the meantime, I'll try and pick something that's quite relevant. S&P is usually something that we should have a look at. EuroCAD, okay, and Euro stocks. All right, definitely will. I'm just going to have a quick look at the S&P because it's pretty much one of the biggest stock markets, and it's always worth a look. You can see we're in a nice uptrend. There's nothing else to say. We are in an uptrend. We've had a little bit of a sell-off, but we've done nothing to hurt the uptrend at all. You can see I've got a trend line here. We've held above it. We've bounced above it. We had a good longer-term support around the 16.19 area. We bounced from 16.24, if I remember correctly, 16.25. So just a correction in a healthy uptrend at the moment is all you can say for that. Stick with the trend. Daily chart. You can see that the 100-day, I'm sorry, I've got all sorts of lines on here, which might be a bit confusing, but the trend line here is you can see a bit clearly. Let me just take this off, maybe a bit clearer. Okay, that's a bit clearer. So anyway, you can see trend line and Fibonacci support around 16.19. We bounced ahead of it. Buyers came in a little bit early. Well, we are in a bull market, so you wouldn't blame them. 100-day moving average at 16.36. We're just hovering above there now, so it all looks pretty positive. I would say I can't see any reason to getting aggressively short this. We have got an obstacle at 16.51. We are getting a bit overbought short term, so we may see a little bit of a pullback into the end of the week. I'm just slightly concerned about this gap. You can't really see it on the daily chart, I don't think. No, you can't. But on the 4-hour chart, we have got a little gap, so don't rule out a spike down to 16.35, 16.34. Fill that. You know, it could happen when you see these overbought stochastics on the short term. So just be aware, short term, we might struggle at 16.51. We might even sell off as far as 16.35. But the bigger picture is positive. 16.35 works really well. We've got the 100-day moving average at 16.36. So I'm guessing that would be a nice place if we were looking to get long and hopefully see a resumption of the uptrend. And, you know, push on through 1651 eventually. So it's just a quick look at that. Do the Euro stocks first, which is one of my faves. The levels do tend to work quite well in Euro stocks. And yeah, uptrend again, obviously. Like the S&P, we've had a bit of a sell-off. Big sell-off. There's nothing really else to say there. We're in an uptrend, okay? Overbought in the weekly stochastic. Don't get too worried about that at this stage. We need to at least retest the upside before we start to worry about that. We've got oversold on the daily chart here. We held support beautifully, 27.18, 38.2% Fibonacci support level, coupled with the 100-day moving average, which at this stage is at 27.12. We bottomed at 27.13. Textbook stuff, rallied off. So yeah, it all looks quite positive. It is a bit choppy. There's all sorts of news about Syria and everything else. I think there was talk of a missile launch today, which made us plunge. So yeah, it's choppy. You've got to be careful. It's, you know, with these news events out at the moment, oil spiking all over the place. But if you can hold on and buy into dips, I think that's the way to go at the moment. Actually, that little spike filled that gap, which was quite interesting. Okay, we're a bit overdone on the short term. I wouldn't worry about that too much. Levels to watch, well, 27, 83, 86, if you read my reports, has been our target. We've managed to hit that and hold it. If we ease back, eventually if we start to push through 27.88 sort of thing, we're going to see 28.0003. What can I say? Yeah. As long as we hold above 27.18, 27.13, you know, it looks all right. The uptrend still intact. Everything's fine. Just want to point out to you something on the short-term chart, which was interesting and played out quite nicely. If you follow my reports, you'll know that actually, let's put a trend line in. I was banging on about this head and shoulders pattern. There we go. That was it. So we did get this head and shoulders. Clearly, left shoulder, head, right shoulder. And once we broke lower, I was projecting it down to 26.64. In fact, we didn't hit that measured target. We held that first Fibonacci support of 27.18.13. So the market was supported quite nicely. In fact, I thought there was a risk we could go to 26.74, and we didn't. That would have been a measured target. Anyway, we're now hovering around this trend line. This is almost irrelevant now. This trend line is not really doing anything, but as long as we hold above it now, it's at 27.58. We could start to push higher. So don't think I can say an awful lot more about the US stocks at this stage. Euro CAD, yeah, let's have a quick look at that one. CAD. I'm going to have to speed up a little bit because we're running out of time. So I'll just whiz through this one in a couple of minutes if I can. And then I'll have time to do FTSE and Brent for Keith. Okay, weekly chart. Yeah, quite interesting. It's moving around a bit. Put some fibs on to give you an idea of what's going on here. Okay, charting quite well this one. Right, see, we had a big sell-off through 2009 on the weekly chart, all the way through to 2012. We've managed a really nice bounce, having got oversold. 141.85 was big resistance. We didn't quite get there, but we got pretty close. Well, we got to 142.27, I think. I'm not reading it right in my hand. 141.27, that's right. Okay, so we got to 141.27, not too far off the 141.85 resistance, and we pulled back from there. So, okay, on the weekly chart, we're looking a bit more negative now. There was quite a lot of resistance around that 141.85 area. You can see a few highs up here, just above it. Anyway, we didn't even manage to get there. We would pull back. Not a massive surprise that we've done that. 200-week moving average at 135. 16, so maybe that's where we're heading, but let's have a look at the daily chart to try and get a picture. Any patterns there? Not really. I mean, this is a really nice uptrend, but a year-long uptrend. Very nice, a year-long uptrend. So, I mean, that's what's really dominating at the moment, and the fact that we've hit some resistance and pulled back. For the short term, isn't that much of a problem. Let's throw some figures on here. Okay, so yeah, year-long uptrend, that's what's important at the moment. We've hit some support at 138.50. That would have been our first downside target, as you can clearly see. We're testing it right now. There is a chance we hold there, actually, I would say. Certainly on the first test. So if you're short and you've had a good run, who knows, maybe it might be worth taking some profit, at least some profit there, if not all your profit in case of a bounce. If we get below this high of 138.17, then I'd become negative again. I'd be looking for that 136.80, 136.60 area, and I would suggest that would be a good little buying opportunity. I mean, we are in an uptrend, a nice strong uptrend, and that's very good Fibonacci support, 136.80, 136.55. Yeah, that's what I would say from there. But sort of think we're going to see a little bounce from that 138.50. I know that the daily stochastics is still quite negative, but it's not a bad support level, I don't think. Anyway, at least watch that level, 138.50. That's going to be the decider. The 4-hour stochastics are negative, the daily stochastics are negative. But anyway, watch 138.50. And if we start breaking below 138.15, then that's going to confirm more negativity and probably get as far as 136.80.55. If we do hold 138.50, then yeah, I don't know, quite positive. What would I say? Yeah, 139.5 area we might bounce back to, but yeah, I think if we do get a bounce from 138.50, you're looking to sell into rallies. I don't think the correction's over yet. I think eventually we will break 138.50. We might hold it today, but any bounce, I think you sell into, because I think eventually we do break 138.50, and I think eventually we do see 136.80.55 during September. That's quite an interesting one to watch, actually. So hopefully I can have a look at that one again in a week or two when I do my next webinar. But does that make sense? I hope so. If you've got any more questions on that one, let me know. I'm trying to skim through it quite quickly so I can have a quick look at FTSE and Brent. FTSE is quite interesting. Okay, good. I hope that did help. FTSE is quite interesting because it hasn't sold off. It is quite interesting. I'll tell you why. S&P, Eurostox, DAX, the other ones that I follow, Mini Dow Jones, they sold off quite heavily, had a really nice correction. I think the FTSE is doing something completely different, really. It's already had its correction. It's already had a very strong bounce back. And, well, I guess I don't really know, but I think, there's quite a few energy stocks in the FTSE, so I'm guessing it's been supported by that. And now, oddly enough, it's sold off in the last couple of days. Anyway, it's kind of acting differently to the other indexes, I guess I'm trying to say. And I'm a bit confused, to be honest. Yes, we're in an uptrend. You can see that from this weekly chart. Yes, we are in an uptrend, but for some reason I just don't trust it. Shorter term, I mean, pattern-wise, it's just nothing. It's all over the place. So it's a difficult one. We've been hovering around the 100-day moving average, and that's really almost irrelevant now. It's not really having any effect whatsoever. Tough one. I don't really know what to say. I just didn't trade it. And I have to write a report on this every day, so it is tricky. Look at the quarterly FTSE. All right, I'll have a look at the quarterly FTSE. Let's have a look. Maybe that's going to give me a better clue. Thank you for that suggestion. Quarterly. It's a wait and see, yeah. I really can't help you with the FTSE. There's better markets to trade. I wish I could say something. Do I trade range-bound markets? Yeah, there's nothing wrong with trading a range. If you see a range, trade it till it breaks out. Quarterly, yeah, well, that's quite a bearish candle on the quarterly chart, if that's what you were indicating. Okay, we should wrap up. Sorry about that. I didn't manage to get as far as Brent, but please do contact me on my website, and I would be happy to go through that with you, which is www.daytradeideas.co.uk. and I will happily go through those markets with you after this. Thanks very much indeed. Appreciate it. Thanks for joining me. I think I've got another one in a couple of weeks, so I hope I see you all then. Thanks very much indeed.